Hello and welcome to another update video about the DXY. The DXY has reacted to our support region that we discussed in the previous video, exactly to the 61.8 retracement, and is now on its way probably to test the upper, let's say the upper boundary lines here of this resistance area. We're going to talk about that in this video. Looking at the bigger picture, the idea is still that the DXY is obviously here in a downtrend, completed an A wave to the downside after a 3-wave top, but completed that A wave to the downside in February last year, then completed a B wave correction as a flat structure. I'm labeling it as an expanded flat. And this C wave of the larger B wave basically topped there in October last year. And my best interpretation is that this C wave to the downside has now started, basically as an A, B, C structure. And this C wave to the downside is obviously a 5-wave move. And it is very likely that 5 waves in wave 1 completed here in January, December, January. Here at around, that was these previous support and swing low here at around $100 obviously. From here we expected a wave 2 corrective rally that is unfolding now. Basically what we're watching for is just evidence that this wave 2 actually topped. We're going to zoom in a minute and take a look at that. But this wave 2 is technically valid as long as we stay below the October high, and that's at $107.30. So as long as the price doesn't break above the October high, the count that you see here is technically valid. However, the wave 2 corrective rally, which is just a corrective bounce that is correcting this decline that started in October. But this wave 2 will get far less likely if we get a break above $105.87. Then it's far less likely. And in this scenario, we are dealing at the moment with an ABC structure. That's how it looks to me. And as soon as this C wave is complete, we can get our third wave down. But the market is very stubborn at the moment, so it doesn't really want to come down. And the idea is that in this C wave to the downside, which is a 5-wave move, we should get into the low $90 region. Now is, I think, time to zoom in and take a look at the potentials, possibilities, probabilities of this structure here. So first of all, you see that the resistance levels, next ones are $103.94, $104.73, and then $105.87. So above $105.87, as I said, this wave 2 gets far less likely, at least if we get a sustained break above it. I shared with you in the last video that if we get an extended wave 2, then we should see a bounce from there, which happened. This is sort of the ideal range for that. Okay, we saw already previous swing low was broken, but only in 3 waves. That kept the door open for a more extended wave 2 in an A, B, C structure. So what I now need to see as first confirmation that indeed a top is in, because the wave 2 could have topped here already. Well, it's a break below the 8th of March low, and that level is at around $102.35. Unless I see that, the short-term trend is up, and it looks as if it wants to go a little higher in wave C. And this could mean we are going to test that 78.6 fib level. So unless we now see a break below that 8th of March low, I would say it is very likely that it's forming an extended wave 2, because the move down was in 3 waves. So that's tricky anyway. That's not, even if the wave 2 top there, this to me looks like a 3-wave move down. So I would have problems to count this as a wave 1 in a wave 3, because wave 3 has to be an impulse, cannot be a diagonal. So therefore, yeah, my favorite count, my preferred count is here an extended wave 2. But be aware, this is the critical low point. If that's taken out, it's very likely that we're testing the $100 mark next. And then you see here this interesting head and shoulders pattern on the chart. But for now, it's very stubborn. doesn't really want to come down. So let's see if we can fulfill this C wave to the upside. That, however, is a problem because the A wave is very long, and as I shared with you, a break above that 78.6 extension will make this count less reliable. And the 100% extension, which is a common target for a C wave, actually points towards $106.83. So we might briefly stretch above the resistance area. We'll see. For now, we haven't even taken out the previous swing high. So the overall idea is that we go down further. In the very short term, there's potential for a short-term upside unless we see a break below the 8th of March low. That's my update about the DXY. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.